Hi all and welcome to our weekly report for the week starting Monday the 13th of May. We have a busy week ahead of us, which starts with a quiet calendar on Monday. On Tuesday we get the UK employment rate and average earnings data. Also look out for Eurozone industrial production and ZEW economic sentiment data. Going forward, China and also US retail sales, and Eurozone GDP data and US crude oil inventories are the main point of interest on Wednesday. On Thursday, we get the Australian employment rate, Eurozone trade balance for March, and US housing data. The week will finish on Friday with the Eurozone Consumer Price Index and the US Michigan Consumer Sentiment. Now, let's take a look at few markets. This is the intraday price action for euro dollar based in 4-hourly time frame. The price action appears to be downtrending, bearish at the moment, capped by this falling resistance trend line pointing to a major resistance around 1.1324 level. Additionally, the intraday price action is creating a rising wedge, which is in its form a bearish continuation pattern. If we see a confirmed breakout to the downside, therefore in the direction of the prevailing trend, and the loss of the initial downside support at 1.1195, call it 1.12, which is signified by this rising support trend line. So either a loss of that level, retest from underneath as a newly found resistance, and then a gradual move lower would favor the bears, potentially targeting 111.25, 111, 110.65, possibly even 110 to the downside. Alternatively, either a pullback to 111.95 and a rally, or a rally from the current levels would initially be capped by 112.55, breakout above that level, 113, nice and round number, and then this major resistance here, 113.24. So a rally into that zone would also be seen as an opportunity for the bears to potentially look for a shorting setups. Only the end of day close and the breakout, confirmed breakout above 1.1324 would negate the current bearish outlook, potentially targeting additional upside resistances towards 1.14, nice and round number, possibly even 1.1454. This is the intraday 4-hourly price action for cable, sterling dollar. Price action also appears to be downtrending, capped by this falling resistance trend line. The current price action is creating a bear flag with 1, 2, 3 touches to the upside, 1, 2, 3 touches to the downside. The price action is initially capped by 130.77 or 1.31 level. Bears appear to be in complete control below that level, with a potential rally into that zone, and a confirmed rejection would open up the way for a deeper retracement to the downside towards 129.77, possibly 129, which is signified by this cluster of the lows and also a nice and round number, possibly even 128. Alternatively, only the spike higher and a breakout above 131 would open the way for the retest of 132 zone, which is signified by this high and this high here. Confirmed breakout and end of day close above 132 would negate the current bearish outlook, potentially targeting additional upside resistances towards 132.50, possibly 133.50, possibly even 134. Dollar Japanese yen appears to be under pressure at the moment with a sequence of lower highs. This is based in 4-hourly time frame. Price action potentially looks like a significant double top here with a major neckline at 109.66 level. Bears appear to be in control below that level, potentially targeting deeper downside retracements towards 108.29, possibly even 107.50, 107 to the downside. Alternatively, oversold bounce backs and a rally higher are initially capped by 110.15 level. Breakout above that level could open up the way for the spike towards 111 for the retest of this longer term support trend line, which is now going to be considered to be a major resistance area. So bears might be looking to find confirmations to re-enter their shorting setups around 111 for a deeper retracement now. Alternatively, only a breakout and end of day close above 111 would negate the bearish outlook, potentially targeting 111.50, 112, possibly 112.40 on the way to 113.50 to the upside. Aussie dollar also appears to be under pressure, capped by this falling resistance trend line. It's creating the sequence of slightly lower highs. There is a bit of a divergence at the moment, very close to this psychologically important spot 70 level. Price is creating the sequence of lower lows, and the oscillating indicator, in our case stochastic, is creating the sequence of slightly higher lows. So there is a bit of a divergence going on at the moment. Price action is bearish at the moment, capped by spot 70. Bears appear to be in complete control below that level, or potentially a spike above that level could target spot 70.40 for another opportunity for the bears to potentially engage and look for a deeper retracement towards 69.50, 69.36, 69, possibly even 67, 68 to the downside. Alternatively, if this divergence plays out and we see any volatility in US dollar, the end of day spike higher and a breakout above spot 70.40 would negate this current intraday bearishness, potentially targeting spot 71, possibly even 71.50 for the retest of this major resistance area. Only the end of day close above 71.50 would negate the bearish outlook and potentially indicates a more meaningful reversal, targeting spot 72.73 on the upside. Crude oil also appears to be bearish. The energy is building. We had this rising support trend line pointing to a major support around 63. The price dipped below, retested that 63 level on a couple of occasions as a major resistance, and the price action is now coiling. It's creating the sequence of slightly lower highs and slightly higher lows. So energy is building, and we could see explosive reaction in some shape or form. This type of patterns normally tend to break to the downside, so the bears appear to be in control below this 63, 63.40. So either a spike below and aggressive move lower could potentially target 60, 59, possibly even 57, 60 to the downside. Alternatively, a breakout higher and the end of day close above 63.40 could potentially create a short squeeze and a spike higher towards 65, 66.26, possibly even 68 to the upside. Lastly, let's finish with gold. Gold appears to be bearish in end of day time frame with the topping head and shoulder pattern, and we have the neckline pointing to 1290 area. We also have a falling resistance trend line connecting the sequence of these lows, pointing to the same level, and that also happens to be R1 in pivots and a fib retracement. The price action appears to be bearish below that level. If we see a dip lower and a flush below 1279, which is the initial downside support, that would incentivize bears to come in and engage, potentially targeting 1270, 1265, possibly 1258, maybe even 1240 to the downside. Alternatively, a breakout higher and end of day close above 1292 would negate the current bearishness, potentially changing the outlook to a bullish breakout above this falling resistance trend line, targeting 1300 initially, breakout above that 1310, which is signified by this high here, followed by 1321, this high here, and then 1333, 1346 to the upside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.